Good morning. I'm Jen Amos at Weiss Research.
I'm Andy Myers, and this is your morning market update for Friday, September 9th. Global stocks took a turn for the worse just before the open of the U.S. markets. The downturn came after Reuters reported that European Central Bank member Juergen Stark will step down after disagreements about the ECB's bond buying program. A profit warning from Texas Instruments is also weighing on investor sentiment in early trading. The chipmaker said that sales and earnings in the current quarter will be lower than expected due to weaker demand across a wide range of products, markets, and customers. But aside from those headwinds, the overall tone on Wall Street seems rather subdued, as investors remain cautious ahead of this weekend's Group of Seven meeting in Marseille, France. The finance ministers and central bankers will make growth their main topic of conversation, and many investors are hoping they'll take coordinated action to help jumpstart the global economy.
The expectation that there may be some pro-growth measures enacted after the G7 meeting had been cooling the recent rally in traditional safe haven assets earlier. But with that news about the resignation of an ECB Governing Council member, investors seem to be growing cautious again. U.S. Treasuries are giving up most of their earlier gains, and the yield on the benchmark 10-year note is falling back below 2%. Meanwhile, gold is gaining back most of its earlier losses and is now trading right around $1,850 an ounce. But the market that Stark's resignation is having the biggest impact on is the currency market. The euro is now falling well below $1.38, while the major markets across Europe see some steep declines. And that strength in the dollar is also weighing on commodity prices. Crude oil is dropping more than 2% to just above $87 a barrel.
Overall, investors aren't having much of a reaction to President Obama's speech before a rare joint session of Congress last night. He proposed a new stimulus program that experts peg at about $440 billion. The centerpiece of the plan is an extension of the payroll tax cut for workers beyond this year. But it also includes new spending on schools and infrastructure, as well as incentives for businesses to hire teachers, veterans, and workers who have been unemployed for an extended time. The price tag seems to be well above the $300 billion reported by multiple media outlets. But President Obama said it will be paid for by additional reduction of the deficit, including possible cuts to Medicare and Medicaid. Many economists say the plan would quickly add jobs, but there's still a big question whether the proposal can win support from Republicans and pass the House and Senate.
In addition to Texas Instruments, we're also watching several other stocks today. McDonald's is losing nearly 4%. After it reported a 3.5% increase in its global same-store sales for August. The biggest gains came from McDonald's U.S. locations, but its Asia-Pacific, Middle East, and Africa units saw sales decline. Meanwhile, biotech firm Dendreon is gaining 1.5% after it announced 500 layoffs as part of its restructuring plan. The cuts amount to about 25% of the company's total workforce. And finally, keep an eye on shares of Bank of America. According to the Wall Street Journal, officials at the biggest U.S. financial institution have discussed slashing 40,000 jobs during the first wave of its restructuring. Overall, Bank of America is aiming to reduce its workforce by 280,000 over several years. That's the latest from Weiss Research. Have a great trading day and a fabulous weekend.